It's a very important topic, especially when there is a doubt on the market sustainability overall right now, and what is happening globally also. So this is a very, very important topic which Sridhar is dealing with it. So we'll record it and share it. Thank you, Sridhar. You can continue. Sridhar, you can continue.
Correct. Uh, the risk is actually, one second, I didn't start recording. Now I'll start. See, financial market and risk in financial market does not require much introduction to people like us who have been investing for a long time. But to see that academically and in a formatted manner is something important, because then we cover all topics and we don't do it randomly. Risk must be seen as a factor that reduces the profit in your transaction. See, you get into a transaction because you think you'll make profit, not randomly. But then what affects the ability to make this profit is what risk is. So the risk can be systematic or non-systematic. Systematic is what affects everyone. Non-systematic is what affects either you or the investment that you make in. It is more specific. Systematic risk or market risk can be because of the market, can be because of interest rate, inflation, currency, political or regulatory risk. We'll see that one by one. Market risk is the risk that is attached to the entire market. Say when the real estate market falls, your property might be one of the best property, but it will not grow as fast as it would normally in a good market. It may similarly in shares, it might be one of the best performing share. In a bad market, it will move little slowly. But in a good market, it will move much faster. Even bad shares will do very well in a good market. Whereas in a good market, even bad shares will do little slowly than what it would have otherwise done. This risk is called market risk. So today, as we are talking, the share market is doing bad. So even finance companies that have got a lot of benefits from the government are not moving that fast as growing that fast as it normally. That is called market risk. Interest rate risk is a very interesting thing. It's a very advanced topic for normal investors. See, as an investor, we are happy when interest rate goes up. As borrower, we are sad when interest rate goes up and happy when interest rate comes down. But interestingly, what happens when you invest in debt mutual funds? If the interest rate goes up, your investment value goes down. That is because of this reason. Suppose you invest 1 lakh in a place, in a bond, and you get 8% return. That means you are getting 8,000 every year. This will happen for, say, the next 10 years. 1 year into the investment, rate is reduced from 8 to 7.5. You have already invested, so you'll continue to get that 8,000.
T-shirt check.
You invested 1 lakh, you are continuing to get that 8,000. But somebody who currently invests the same 1 lakh will get only 7,500. So he has a choice. He can invest more than 1 lakh to get that 8,000. He can invest directly into that, say it is equivalent to investing 1 lakh 10,000. We'll not get into the perfect maths. 1 lakh 10,000. Or he can buy it from you for 1 lakh 8,000. Because for 1 lakh 8,000, you'll get the same 8,000 that he would have otherwise got for 1 lakh 10. For you, what has happened is you have invested 1 lakh because the interest rate dropped. Your bond picked up in value. This is very useful for these numbers. Might look small when you are talking in lakhs. This is very useful for PF in trusts, which invest say 10 crore, 15 crore at a time. This is done by all those debt mutual funds, which handles thousands of crores. So for them, what will happen is a small change. So this February on 6th, 7th, there was an interest rate drop from 6.25 to 6. So what happened was the FD that you put in will continue to draw. You put in a 3-year FD in only January. For 3 years, your rate is fixed. It's not going to fall. When the other rate falls from 6.25 to 6, you're happy. That's why even as an investor, generally, you'll be happy when interest rate falls if you invested ahead in a good rate. Next is inflation risk. Inflation risk is known to everyone. The simplest way of looking at it is what even P. Chidambaram called as the dosa economics. If today dosa is 25 rupees, 1 year down the line, it's going to cost 30 rupees. So you need to earn that much more. 5 years down the line, it would double from 25 to, it will go up to 50. So what happens is, when you get a fixed income in a debt, you get say 8%. Inflation is 4%. So actually you are getting only 8 minus 4, 4%. If inflation goes up to 5, 6, your return, actual return is coming down. From 8 minus 4, it has now come to 8 minus 6, 2%. Sometimes it can be negative. If inflation is 10% and your return is only 7%, you are getting a net negative income of 3. Inflation risk is a very important risk that affects all of us, which is why people are today reluctant to put it into fixed income thing, fixed income investments and move to stock. But then stocks have their own problem, which we will discuss in detail. I'll run through this, then we'll make it an interactive session where each one of you can talk about your experience, what really worries you, how we can address that, we will discuss. Currency risk is relevant when you do investment across borders. But in some ways, it actually affects you. See, one of the main reasons why the stock market currently is falling, US has become, US is giving more return than normally it would do. Inflation is very high in US. The textbook method of addressing inflation is by raising interest. So what happens is US dollar is getting stronger day by day. US interest rates are remaining high. So if you have $100, you invest currently in US, 1 year later, you will get something like $104. But suppose you invest the same $100 in India today, you convert it at 85. So you get $100 gives you 8,500 rupees. You invest for probably 6%. So 8,500 at 6% might give you something like 420, 430 rupees. So at the end of 1 year, you get 9,000 rupees. And if dollar meanwhile has moved up from 85 to 92, or say even 9,000, when you take back the dollar, you are going to get only $100. So today you have $100, you invest in India, you make money, you take it back, you are still left with the same $100. That fluctuation in currency values between two currencies is the forex risk of the currency risk. This coupled with the interest rate is one of the biggest killers of the Indian market today, Indian share market. Political and regulatory risk is, say, take a state like Andhra Pradesh. Yeah, automobile company invested thinking YSR will be there. They pay him a lot of money. They come in there. Next, Chandrababu Naidu comes. He tells them, "Boss, you have paid YSR so much. Unless you pay me so much, I will boot you." Those kind of risk are the political risk. It's very high in countries of Africa, Latin America. You don't know when the government will fall. New government will come in. Even in countries like India, you don't know when a new law is brought in. You get an opinion, you do a particular investment, then there is a retrospective amendment. Those kind of issues are regulatory. The government may not change, it's not political. They change the regulation from the time when you invested. This is especially true of Asian and African countries. Today, the problem is everywhere. It is there in US where after Biden and Trump comes in. Trump is changing all the laws. He is doing what Biden did, do the opposite. This is something that's now political and regulatory risk is something that's going across the world. These are systematic risks. What we discussed till now is systematic risks that are applicable to everyone, not specific to Sridhar or to Raghu or to Dr. Tillaivalal, but to across the market. It's true for all of us as Indians. For Pakistan, Bangladesh, it might be different because, but it is true for a larger group of people. Non-systematic risk is investment space. The advantage of this is you can diversify your portfolio. Put some in gold because gold will have inherent risk. Put some in, say, convert to US dollar, keep it there as US dollars. US dollar anyway, Indian rupee depreciates. Every year it depreciates by 10%. That means you have got your 10% return. It could be in Indian share market. Indian share market are going down, you switch to debt market, mutual funds. That's how, that is what diversification is, where you handle various kinds of risk. What are non-systematic risk or company-specific risks? Credit risk, liquidity risk, business risk, operational risk, and reinvestment risk. Reinvestment risk is a very, for want of a better word, I'll use funny risk. We'll come to it. It will be interesting to discuss. In less than 5 to 10 minutes, I'll make it interactive so that all of you can participate. I'll just run through this and I have another 10 slides on fraud. Both of that I'll run through, then I'll make it in. Credit risk is easy to understand. You put in a bank, you give put it in a FD. Finally, you find the company is not there. They have run away. Wherever returns are, if most of us are old, we remember in early 90s, the interest rates went up so much, 36, 38%, that one man advertised, I don't promise you heavy return. I promise to repay your principal. That's credit risk. Second is liquidity risk. Take, for example, real estate versus gold or share market. See, share market, tomorrow is Friday, I sell the share, Monday morning I get the money. If today by 3:30 I sold the share, tomorrow morning at 9 o'clock I would receive the money. There is no liquidity risk. The government has taken care of T+1, you get your money. FD, bank FD, you need to go to the bank, talk to them maybe 1 or 2 days. The FD, your relationship manager might say, don't do it on February 28th, sir, do it on March 1st. So that at least this month my picture looks rosy. That's the worst thing that can happen unless there is a bad debt risk that we discussed earlier. So liquidity risk is real estate, your ability to sell, realize the money. They say, Adi Masam, Margadi Masam, they can't do a deal this month. We'll do next month. Registrar is not giving me a date. Those kind of risk are the liquidity. Real estate is the biggest culprit. Business risk is everything else being good. Sometimes the business itself might fail for any number of reasons. Take Kodak. Who thought Kodak will fail? But when digital photos came in, the old kind of photos, the cameras, they failed. When 10, 15 years back, we wouldn't have thought Nokia will collapse. Nokia collapsed because they were still on the button phone when everybody else moved to touch screen. Operational risk is the ability of the individual managers to run the company, the business owner to run the company. Even in good businesses where everyone is doing well, there will be some set of businesses which will be doing bad. That's basically all. Reinvestment risk is a very important risk. Normally, we wouldn't look at it much. It is very important to look at reinvestment risk. It's not a textbook concept. 25 years back, Hindustan Lever had this problem. They were making a lot of money. Money was pouring in. They didn't know what to do with the money. That's a normal saying that we say. I don't know what to do with the money. But it's actual problem because there is a saturation in the market. You are making a lot of money in it. Nobody else can come in. You can't expand. So what do you do with the money? You can give it to your shareholders as dividend, but then you might need the money back. So you either keep it as cash. When you keep it as cash, what happens is last year you had 100 crore, you made 10 crore profit. So you are making 10%. This 10 crore you distribute 5 crore as profit. Keep back the 5 crore, 105 crore. You still make the 10 crore profit. So now you have made 10 crore profit on 105. You distribute another 5 crore. Now you have 110 crore, but you still make the 10 crore. You don't need the additional money of 10 crore, but you don't know what to do with it. That's the reinvestment risk. In some ways, it's a good position to be in. There are other kinds of risk like speculative risk. You go and choose a bad thing. Social and environmental risks. So you invest in say a company that's on the seashore making prawns. There is oil spill, your unit alone gets it. You have an environmental risk. Event risk is something like COVID or a terrorist attack attacking. Say Bhopal gas tragedy in Bhopal. If there is a tractor making company there, it also gets affected. That's an event. How do you manage financial risk? It's by diversification. You spread investments across asset classes so that one does well at a point of time, other does. The problem with this is you always have this mental issue. If only I had invested all of my money in that one horse that won the race. That's not humanly possible. You will have to be careful. Hedging is one good option, but that can be done only with little knowledge of the market, the futures options by shareholders. Originally, when futures and options was brought in, it was brought in only as a hedging method. So now it has become a speculation method. You and I go in and buy shares on futures, sell them. We sell a put option, we buy a call option, all those kind of ferry we do on a future option, but it's originally a hedging thing. So normally what happens is, say you export to Bangladesh, you are worried about the Bangladesh currency. So what you do is, you feel today I will sell the Bangladesh currency. The moment I export, I will sell the Bangladesh currency at today's market. So my return is fixed. For that, he takes a small charge. Supposing it's a 90-day payment, I export now. The money is going to come in on May 27th. So he will reduce the interest plus a small charge for the risk that he takes. He'll give my money upfront. That's the original hedging that was there. All exporters have to do a currency hedge. They can't generally keep it what we call naked. That is unhedged. Asset allocation is similar to diversification, where you split all your assets in various places. So if one goes bad, one does well. See, you need to have some liquid money, so you keep in fixed deposit. It gives you very little return. You keep something in share market. You can sell anytime you want. You get the money. But selling share market, 1 month back had I sold a particular share, I got 2,000 rupees. Today it has fallen by 15%. Today I sell it, I will get only 1,700. So liquidity is not just going by, can you get it as fast? Sometimes what happens is, especially in shares, it goes up and down on a daily basis. So it has its own liquidity problem. So you keep money in different places to suit your purposes. As you get older, you might need money urgently. That's why you'll have to keep it in more and more liquid place, at least a part of it in liquid places. Younger people may not have that problem. They have a reverse problem. They need to make their money grow fast. So these kind of thought processes go in. That's the last part, risk assessment. You assess your risk and start doing the investment based on. So there we cover the entire textbook idea of fraud. But I also wanted to go into a portion where I thought we will talk of fraud alone as a risk, though it's never dealt with greatly in textbooks. Would all of you like to participate in a discussion right now, or we run through fraud and then get back here? Then do we start discussing? Which one would you like? Any feedback on that? Ravikumar sir, do you have anything to say on that?
No, there's a chat saying that we discuss on fraud.
I don't have anything.
One second. Please discuss fraud. Vinod does. Yes, Vinod,
Yes.
I'll do that and then. Fraud risk is actually one of the biggest risks that affects most of us, but even textbooks, when we talk of risk, doesn't discuss this in detail. Fraud risk is a deliberate attempt to take money from you. It enthuses you. I don't have to define fraud. All of us know what it is. But we won't realize fraud unless it happens. However good we are, however great we are, there is somebody who is even more intelligent than us. And if he is unethical, he is going to get us into trouble. The best example of this would be, most of us are old enough. We used to enjoy Mad Comics. Mad Comics used to have a series called Spy vs. Spy, where one man tries to cheat the other, but in turn he gets cheated. That's basically fraud risk. The simplest thing is corporate and accounting fraud. We know any number of companies who have manipulated their accounts. Enron, Satyam. These are textbook cases where frauds happened. There was a deliberate attempt to boost revenue. Good post a rosy picture where investors kept falling in for the money, fraud, and investing in those companies. Insider trading. Everyone understands insider trading, but we don't understand how it affects us. One of the biggest insider trading is what is now called front running. If you want to understand what front running is, Axis Mutual Fund got into trouble on this. Quant got into trouble on this. What happens is the investment manager, fund manager tells, okay, buy Bajaj Finance to their agents now and say over the next 15 days, buy so much of shares. What these people do is upfront they buy. On the first day, second day, they buy a lot. Then they sell it back to the fund. This affects you in this way. When they buy, the prices go up. Then they buy, say, supposing Bajaj Finance is 8,000 rupee today. And if without affecting the market, they are asked to buy, but they're given a range between 8,000 to 8,200 you buy. The average price should be 8,100. Yes, a fair indication of how orders are given. What these people will do, at 8,000 itself, they'll buy a serious note. It will push the price to 8,050. So they start buying only from 8,050. They'll go up to 8,200. Instead of 8,100, it will land up at 8,125 average. So 25 rupee of yours has got stuck there. These people would have, the stockbrokers who are buying would have made them. This is called front running. Front running affects the yield on your. So you buy at a high price and sell at a lower price. When selling happens, the same thing happens. He sells it to himself and then those kind of things happen. Insider trading is one of the biggest problems that the current market is facing. Ponzi and pyramid schemes, again, it doesn't require much explanation. We have all gone through it, but we still keep falling for it. It happens regularly. Any number of, see, basically, it's like this: one man starts it, he sells to 5 people. He tells those 5 people, you bring in 5 more each. So 25 people come in. From them, the 5 plus the original 1, 6 gets a share, and there is a saving. This 25 gets 5 each, so 125 get in. The 125 get 5 each, so 625, 3,125, 15,000 and odd, 75,000 and odd. But then at a point, this breaks. If there is no real business, like Speak Asia scam was a 2,200 crore scam in 2011 period, when 11,000 rupee was asked to, everyone was asked to deposit 11,000 and address online questions. But there was no real need for it. But then people thought they were getting money for, you invest 11,000, you will get 50,000 every month, every year. What was happening was subsequent people. The 5 was getting from the 25, the 25 was getting from the 125, the 125 was getting from the 625. At a point, the bubble burst and it became a scam known to everyone. Cyber fraud and financial scam. Again, most of us have been affected by it. There are any number of events that happen. There are now on Prime, there is 6 episodes, 7 episodes movie on how these frauds happen. It is everywhere, but we keep falling for it. That's the whole funda of a fraud. However good you are, there is one person who will find a way to fool you. Money laundering. Money laundering is not a direct fraud, but it can affect us. See, in the HSBC fraud, I myself got caught. I had given all my documents to a friend of mine who was then working in HSBC. In 7, 8, I forgot about it. I didn't want to open an account. I totally forgot about it that I had given him the document. 7, 8 months later, demonetization happened. Then in 2, 3 months later, I got a mail from the income tax department saying, you have a bank account at the HSBC, 1.5 crores has been deposited there. Do you want to take it, or are you going to say it doesn't belong to you? I was happy to say that 1.5 crore didn't belong to me, because actually it also didn't belong to me. And if I had claimed it, I would have got into all kind of problems like the Savala, and HSBC was fined for that. HSBC is actually known for doing these kind of activities. So how do we mitigate these frauds? Sarbanes-Oxley, I have worked on it. It's not that great, except that Americans believe in making everything transparent. Sunlight is the best disinfectant. Everything is there upfront. It is up to you to understand it and do it. I am being transparent. Buyer bill is how US approach. India is little more specific. Not that we are better there was. That's not the case. But we are forced to, because of 130, 140 crore population, everybody getting in the in 2, 3 years, people start doing, they don't know what is shares. They get into shares in 2, 3 years, they start doing day trading. They do butterfly spread on options, those kind of things that they do. So SEBI is supposed to keep an eye on everyone. 2 days back, I saw a report from SEBI saying open interest, how they are going to do it. They want to use AI to see how markets react and catch the fraud as it keeps happening. See, one of the biggest problems that happens in India share market is pump and dump. What they do is they catch hold of a share, keep pumping it up. It keeps bloating. Everyone gets into it. And as the 1929-30 US Wall Street collapse says. One of the, I don't remember the investor, he's one of the biggest investors. He was getting a shoe polished. The shoe polished boy asked which share to invest. That's when he realized the bubble is big. He went and withdrew all his money. The market collapsed in a few days. That's not actually wrong. It could be a urban legend. It could not be. It may not be a true story, but it's not wrong. My uncle used to say, "Open your 5 fingers, spread your fingers. The thumb is when you want to get in. You will start acting in your index finger. Actually, you will buy at your middle finger, which is the bigger, longest finger or the tallest finger. Then you will realize you are starting to lose. You will want to sell during when you are at the ring finger, but actually you will end up selling it when you are at your small finger. That's again a very fair representation of what happens at the market. Now we are getting into better technology. What I was discussing about the use of artificial intelligence and big data analytics, those can spot problems as it is happening. One of the biggest problem that, without getting into politics, I'll say the name just to give a credibility to the whole thing, but I'm not into politics in this particular instant. P. Chidambaram, one of the biggest accusation against him was he gave access to market data to some people. That is the co-location scam that we talk of in NSE. So what is happening is there is a particular methodology where, see, what happens is when share prices start eating up. I can't pronounce it, so I'll say eating. It's not EAT, it's just HEAT, eating up. What happens is there'll be a lot of activities. People will, the volume will increase, price may not increase. But then prices start increasing. That's when normal people start noticing it and start buying. But technology is now so good that within microseconds, your computer can access what is happening, which share is suddenly picking up activity, and then take this and do it. For this, you need access before the others. That was supposedly given to some set of people than the others. But that's for you to understand. There is no politics in it. I'm only saying how AI can actually do this. Big data is again something similar. Blockchain technology, as somebody who has been who has worked in blockchain technology, I can say this is to a great extent right, but unfortunately it is abused like any other thing that we use of. Blockchain, Indian fintech is much advanced that we don't need blockchain to give that make our data tamper-proof. We are really there. Somebody who has worked in the 70s and 80s share market will know how much we have moved. See, when I say 325 today evening, I sell a share. 9 a.m. tomorrow morning, I get the share. Sell the share, I get the money. Buy a share, I get the shares. There is a transaction that's happening. When I sell a share, my delivery happens to my broker. My broker delivers it to NSE. After netting off buy and sell, spend. Everyone gives off, it gets netted. Then the buyer's broker gets my share. It's delivered to him immediately. By the same time, once it is delivered, it doesn't happen after the market starts. It happens in the middle of the night. Once it is delivered, parallelly he has given the money to his broker releases the money. Same way it's a net. He might have sold Hindustan Lever, bought Reliance. The net money is transferred. Some people, some brokers have to give money, some brokers have to take money. But in this context, this broker will assume it's the only transaction. The money moves from the broker to NSE. NSE gives it to my broker. My broker gives it to me. By 9 o'clock, I get the money. Normal people like us can't do this. Brokers sometimes fail because they oversell, because they don't have, if there is a mistake, Then it used to go for auction. So what will happen is I sell the share, but later I realize the shares prices have gone up. I don't give delivery. So the next morning, what they do is tomorrow morning price, they buy it and give delivery to the man who paid the money. And the difference, if it's a profit to me, it is given to me. If it's a loss to me, I am debited. That's how it happens. So why I'm saying this is the mechanism is now set for delivery and giving the money. We don't need much of data tampering, but other markets have a problem on this. Biometric security is where you log into your terminal, somebody else logs in. SEBI is today so advanced, it can look into all these. Still mistakes happen. There has been cases where they've punched in a number by mistake and share prices have fallen by 10%. I didn't track it, take a copy of it, otherwise I would have shown you. Later I can show you, even now suddenly these issues happen, especially in shares which are open to F&O, there is no 5%, 10% law. So suddenly Reliance, instead of 2,124 you want to buy, you gain 21,240. The market goes for a spin. Those things are being controlled now. After one or two events like that happen, they are taking care of it. Corporate governance. See, these are what I discussed earlier as of individual cases. Corporate governance is to take care of what we were saying of front running. People, see, even Madhuri book, there was this problem of calling names where they were told that you have invested money and doing that. Those are corporate governance issues.
Don't lock the door.
The whistleblower is where somebody comes up and tells what is happening. Whom to tell to is risk committees. Fraud prevention units keep looking at activities and take care of it. Investor awareness and cybersecurity. Investor awareness is events like this where we keep talking, spreading knowledge. Supposing your phone, you give it to somebody, they get in. That's why we have this multi-factor authentication. Real-time fraud detection system is, it could be like after a long time you log in and sell, it will ask you twice. That's imagination. I'll give you a real case. I don't know if you have noticed, when you sell a share that has very high PE, it says this share has a PE of 50 times. Are you aware of it? You buy F&O or you get into your trading account, it says if 90% of people make losses on F&O. Those are real-time warning, we can say. It's a statutory warning, but detection systems are one more of it. It says that this transaction is not your normal transaction. Those kind. So this is an overall idea of what is fraud. And I've not gone in too much. Even without that, I have taken nearly 37 minutes of your time. This is a very vast topic, so I can only scratch the surface. Now what I will do is I will request all of you to unmute yourself and start talking about the same issues that we discussed or related issues that you feel are. Raghu, do you want to start? Or Vijay?
Sridhar, you can mute yourself.
मैं नहीं खाती पापड़ इसलिए अरे पापड़ की सब्जी
No. You can mute Vijay, I'm saying.
नहीं, नव्या को भी बहुत पसंद है पापड़ की सब्जी को बहुत
To
पसंद
take
है
up, there'll be 3 dots that you
बोले
can.
दादी
Raghu, you want to, if one starts, the rest will get in. So I would request.
Sridhar.
Yes.
Kumarvel here.
Yes, sir.
It's a very wonderful explanation you gave us about the various facets in the stock market and all this stuff. I want to ask you a fundamental question. Now, I find that the gold price is going to go up phenomenally with Trump also. Now he wants to bring this dollar based on gold standards. It is hearsay. I've been reading, I've been listening a lot of people speaking. Do you think in the present situation we should buy gold?
Sir, gold on the, if you see, it is a defensive mechanism. When everything else is in trouble, people move to gold.
Yeah, that's why the gold price has gone up phenomenally now.
Gone up phenomenally. Generally, I'm not an expert on this. What I can tell you is, if there is a queue already, the opportunity is lost. In Nikoda, I read the thing saying maybe gold opportunity is lost. But what I can, now that you have opened the topic, what I can say is, I know you personally. That generally, we have this feeling that for my daughter, I will buy. But I read a beautiful article. It was eye-opener for me also. Gold is generally, forget a situation like this. Gold is generally not giving that much of a return. So you can always invest in a better thing and switch to gold whenever you want it. In the last, whoever invested in the last 6 months before, 8 months before, have made much money. And one way is gold is a defensive mechanism. So you can always put 10% of your money in gold. That you can do. That's a diversification. In worst times, gold will get you the best.
And one more information which I read recently, which I want to share with the constituents who are participating here. I believe the Fort Knox holds the majority of the gold of US. There itself, I believe there is a duplication in the sense tungsten and gold have the same density. So what they have done, inside they have put tungsten and on top it has been not coated exactly, a small layer of gold is on top. So, and they are claiming that they have 470 tons and all that. Even, in fact, Trump is now personally checking whether all the gold available in Fort Knox is legitimate or not, because they have manipulated this. This was done by the Chinese initially, I believe, marketing gold and all that. So this is another thing which you have to be very careful while buying gold also. Whether you are buying original gold or tungsten infused gold.
Especially bars.
Bars, especially bars only I'm talking.
Bars. Okay. So what you are saying, I was thinking about this today morning. So I'll share with it. You can, all of you can share your views on it.
Yeah.
Roughly 10 years back, Modi came to power. When he came to power, he said, I will wash dirty linen in public. At least we thought he will do it. But he didn't issue a white paper. He, like Neelaganda, he ate all the poison, kept quiet for 5-6 years. From a fragile file, we automatically moved. We grow despite the government, not because of the government. So we moved up, we came up. But what Trump is doing is washing the dirty linen in public. It is affecting across the world. All markets are getting affected. But probably that's so. Trump has only 4 years. Modi took a chance. He will be there for 15 years. And he proved, right? He will be there for 15 years. So I was thinking of it when I read this today morning. I read this article today morning, and that was my
Okay. I'm over. Let anybody else let them ask questions now.
No, actually, Sridhar, one thing is whatever way you are investing overall, the inflation always catches up overall. So the interest rate, if it has to be at par with the inflation, it should be at least double on deposits. Approximately double. But at the same time, they are looking at the growth of the industry and all that, and then trying to keep a lower rate. That is, earlier, see, what you normally do is what you buy in the market and then you sell it slightly above the what you purchased. But here they want to sell it, so they are keeping the purchase price less. But this is affecting especially the aging population who are dependent on the returns on deposit.
Yep.
When that goes down, then they look at alternate avenues to make more, returns,
High risk.
and they
High risk.
start investing in stock market, which is a risk factor.
Yes.
Okay, anything giving a slightly higher returns overall is always there's a risk associated with it. So they try to go for that, and also
If
they
not stock market, what we discussed in
late, what
19.
has happened is even in the online frauds which are happening, it is happening more on the pensioners overall.
Pensions.
And now today I had another one saying that it is on the scholarship of students, where the callers call up and say that they'll act as a government officers and ask you to deposit some amount. So with that, they say they will get so many times the scholarship. So these are also happening overall. So in
That's
which
right.
case, how do you see it can be balanced? Inflation versus lower thing, and every cost going up overall, you know. So in
Sure.
what way? Because as you grow older, again the problem is your medical
Problem.
insurance is costlier, but that is when you need all the medication. Not when you're 30 or 40, but when you're past 60 or 70, like that, you need more medication, treatment, and all. Whereas all those restrictions are there. How to correct it according to
How-
you?
See, India is an inflationary economy by itself. ரெண்டாவது வந்து government, I'm not getting into politics, so in the government is happy with the inflation. See, government borrows for 30 years, 10,000 crores. India denominated borrowings they do from Japan, those days US, Asia Development Bank. So 30 years later, you repay money, it has no value today. What you get today. So governments in the past have been very happy to have free running inflation. What it affects us, as you said, people like us. So one thing is now to some extent governments are controlling inflation because wildly running inflation is dangerous to the government. But beyond a point, government is not able to control it. So we only can mitigate. Where it gets mitigated is, as you said, medical. So it's better that people at a young age gets into medical policies, start saving, where there is a fair chance that your money grows in the longer run faster than the inflation during those periods. Inflation is something that India will have to live with. You can't. The best year of inflation in India, which is the lowest, will still be higher than the worst year.
Can I come in, please?
Yeah, please.
Sridhar,
Yes, sir.
see, in economic terms, wherever there is inflation, there is growth. In any country, where there is a controlled inflation, there is growth.
Yes.
For example, our inflation is say about 7-8% or so, whereas UK has got 0.5% or 1%. There is no growth at all. No, it's not growing. Whereas our country,
Sridhar, you can mute. Sorry, Kumar, once again. Sridhar, you can mute battery. Yeah. Okay. Sorry, Kumar. Continue. Please continue. Kumar, please continue.
Yes.
Yeah. See, my point is, since I've done economics also,
Yes.
there they say as long as there's a controlled inflation and all that, growth will be also extraordinary in that particular country.
Yes.
So we have seen countries where there has been no inflation at all, like 0.51, and the growth has been very limited.
Yes.
So this is again contradictory to what you say. That's what I wanted to ask you.
Yes, sir. Contradictory. That I said inflation is natural. நீங்களும் அதான் சொல்றேன், inflation is natural, inflation is welcome at certain level. That line came to me, I didn't say that because I didn't want to.
No, inflation primarily should not be artificial. It should be normal. See, earlier days,
correct, sir. Controlled. Your word controlled is the best word for it.
Earlier voting used to take place, lot of inflation, but that is not the right inflation. In the natural economy, as inflation grows, the economy in a natural way, at a slow-paced process, the economy of the country also shall increase.
Sir, if, now to think of it, US got into that problem. For long period, they had no inflation. There was a natural growth in the market. So what happened was companies that were making 1,000 units of a product, next year they could make 1,500. Next year they could make 3,000. Then they moved to 30,000. But when they reached, say, 30,000, example, they hit a roadblock. Now, inflation is the only way. Last year I sold 30,000 units at 100 rupee. Now I have to sell 30,000 units at 105 rupee if I have to increase my revenue. That's your point. And that's valid. Economies go through those cycles.
And I want to ask you one more question, Sridhar. Even today, there is a lot of black money, another parallel economy going on in our country, in spite of all this which has done. And this is also contributing to the inflation and all that. But
yes.
The moment you suppress the black money and all that, immediately the economy goes down, if you watch.
Yes.
Over a period of time when demonetization came in and all, our economy was in doldrums, actually. Earlier days, the black money was spread across several people. Now it is only with a particular class. So that is also probably having an effect on our economy. That's what I feel.
Yes, sir.
What people are doing now, because of the strictures, all people who are having black money tend to buy gold.
Yes, sir.
And
Gold, land,
stock it.
land use.
So the money flow, the cash circulation is curtailed. So if the money flow is curtailed, the economy shall find it difficult to grow.
I'll find it. Sir, if you remember, 90s and early 2000s, they will always say when Jayalalitha comes, there will be a cash flow.
Yeah. Very true.
Those kind of things. It's actually true, sir. That's why, if you remember, I was very young. I only read it through the books. But late 70s, I have heard the budget speech. There was always a huge control on black money. So, or at least an attempt by increasing the taxes and all that. Only when 90s, our same Chidambaram reduced the rate in 96, 97, the economy started booming. Part was the Manmohan Singh relaxation, but a bigger part was in UDF relaxation by United Front relaxation by Chidambaram, which proves what you said.
Yeah. One more question. Our country is reducing income tax for the people, but that is very minuscule. Instead, if they abolish income tax and they have GST and all other mechanisms, our people will start spending freely on articles, and the government's revenue will go phenomenally.
Sir,
people are given more purchasing power.
Yes, sir. Sir, where I will agree with you, reduce also GST. But even reduce GST also.
Yeah. That's what I'm
saying.
Where
I will disagree with you is maybe increase. Maybe increase, don't increase. But don't reduce.
No, let them not increase GST. See, even if they reduce,
sir. I'm saying reduce
even
GST.
if they reduce GST, with people with purchasing power will buy more, economies of scale.
Reduce GST, sir.
So immediately the income of the government goes up phenomenally.
So basically, why
they are not taking such a stand, I don't understand.
Sir, it might happen now. It might happen. They're now talking of, the revenue neutral rate is much lower than 18 is what is currently going on. Because 18 is one rate, 12, 5, 0, 28, all that is there. The revenue neutral rate is going down. Government is sitting on a huge pile of money. Markets are not doing well. They might do it. Because you majorly agreed with it. That point of time, I didn't say that. I'll just say one line. I'm a textbook economist. I think income tax is an important thing. It should not be. It should be there.
Okay.
If you have to reduce indirect tax rather than that.
No,
Okay.
indirect tax
Thank you.
also, the GST, the actual rate was around 15% or so. Okay, but when the Fitment committee started doing it before the introduction of, announcing of GST rates and all in late 2016 and early 17, there are a lot of demand. See, people did not understand overall the how the GST was going to work. So every industry, for example, an industry was exempted under excise duty, but was taxed under some lower rate or some rate under VAT, or some VAT also was not uniform. Some states were taxing higher, some lower, some even exempting. So these people started lobbying in overall and wanted their own rates without understanding this. And also, what happened was the other negative thing which happened in GST is the technology structure which was there, like filing of return and all, because they did not have the actual data of number of transactions which are going to be happened and reported. So, because VAT and all were standalone systems, and not many transactions were, very few transactions were being reported. The other things were not being reported in the state level. So they were not able to capture all these things overall. So based on this, whatever infrastructure, the software which was built, that crashed overnight. The first filing date itself, it crashed. So this has to be brought in, and a simpler version was brought in, where immediately people jumped in overall, and there were quite a lot of even professionals from our own profession, CAs, who also joined this background without understanding where they will get caught. Otherwise, if proper provision compliances were there by 100% of the people, or at least 95% of the people, definitely the rate in the second or third year could have been brought down to 12% and 5% and some 0% overall. Or remove all the 0%, bring in 1%, let us say, to track the transactions. But a lot of lobbying goes on and all. So that is where the issue came. So, but what we are seeing gradually is the more and more compliances are happening. Even state governments which were clueless about how to assessment and all that, now they are also slowly coming in. So with this, more compliances might happen. Then I foresee in 2026-27, there will be only three rates: a low rate at the raw material stage, an intermediary rate of finished goods and all, and a higher rate for materials like what do you call, fancy consumer like fridge, TV and all. So there could be only three rates, and exemptions could be totally proved in overall. So this I foresee. Then if that case, yes, what you rightly said was things can come down overall. Okay, so even the inflation may come down at that point of view, and there could be room for reduction of income tax. But what has happened in income tax last few years? The personal rate was kept there, but even the corporate rates went as low as 15%. Because of that, more profits were being declared and gone into some person. And the other problem was the exemption for dividend tax, which was removed a couple of years back. So all these things were contributing slowly. I think 26, 27 should see a lower tax regime, which is coming in overall. But again, another unfortunate thing which is happening across all states is the freebies which are being given. And because of this, the state governments resort to borrowings. So this borrowings also adds to the what you call inflation in the respective states overall. That is where you see a price disparity between various materials across the country. So this freebies, first of all, should go overall by whatever methodology. This should go, and the other thing is, there should be a state funding of elections. Private funding should not be there overall. All this should be should if it is taken care of, then you can see a lower inflation and a better economy in the times to come. But certainly 26, 27, I see a lowering of tax rate both in direct and indirect taxes.
I fully agree with Raghu. See, my point is, income tax is not paid by all. See, the point is, there are a lot of small vendors, and that's the major population doing business in our country.
Yeah.
And these people, like Bajjiwalas and all that, they almost clear a lakh of rupees a month. That amounts to 10 lakhs of rupees. So, these people earlier were not paying tax. But now, after GST came in, whatever they purchase, someone gets some money out of it. So that is one plus point of GST actually.
Yes.
Raghu, correct?
Yeah, you are right.
In fact,
Mark,
other
you are right. More people
address
have come into GST, but income tax raise is coming because, see, 50% of our GDP is almost 40-50% is agriculture. It is totally exempt. Agriculture should also be brought into tax in a small way, but it is a highly sensitive matter. Okay, if you see the assembly or Lok Sabha or other proceedings, the moment they say agriculture something, there'll be a big clapping going on. Similarly, poor, this, that, and all freebies are being announced. There'll be a lot of welcome by across all the people. So this all should stop overall. Unless this stops overall, it is going to be very difficult because all these freebies and all lead to leakage of income also. Unwanted people make more money out of all these things, and unaccounted money starts growing up in the name of this thing. And again, they want more industries, but to put up an industry as such, it is costing every entrepreneur a lot of money, even in initiating the or putting up a plant or anything. At every stage there is corruption. This corruption is the biggest thing which is happening in India overall. So this should go overall, because absolutely there is no accountability or there is no this thing overall. So if you look at it socially, I have seen that overall where it gets hit is the cost of education overall, and also cost of social functions like marriages and all, which have phenomenally gone up overall. Because of this, corruption also goes up overall.
More than that, residences. See, you buy a flat for 2 crore.
Yeah.
I'm sure 1 crore of it has gone for bribing. Either land prices have gone up, approval prices, M's and bricks. Nearly 1 crore, 50% of it is corruption. If that 50% is taken out.
Sridhar and Raghu, but who is the cause for all this? The politicians. The politicians across parties, once they get elected, they spend a lot of money getting elected, and the only focus is not to do service for people. Their primary objective, I moved with a lot of politicians. Their primary objective is to make money.
Correct. Correct, Kumar, but there is sometimes, what you call, we have to pay a price for being a democratic country. Because you can't have a dictator coming in and sitting it like in China or North Korea and all. So there is some price we have to pay for democracy. That is what we are paying now by way of bribery.
No, sorry. Raghu, I beg to differ. We are not a democratic country at all. We have to coin a separate term. We are capitalist stroke democracy. Because the richer are here also, the richer are getting richer and the poorer are getting poorer.
No, the problem is we are a confused economy always. We don't.
அதுதான் சொல்ல வரேன். இப்ப அமெரிக்கா வந்து is a capitalist country. We are also the same, but the democracy in ஒரு attachment. அவ்வளவுதான் தவிர here also rich are getting richer, poor are getting poorer economy.
No, that is across the world. Even in US it is the same.
US is called a capitalistic economy.
அதாவது welfare economy. There the poor are getting taken care of. Here the poor are left to their own device. அதுதான்
இல்லப்பா, அதுதான் சொல்ல வரேன். இப்ப வந்து கொஞ்சம் poor கொஞ்சம் இம்ப்ரூவ் ஆயிருக்காங்க. இப்ப ஆக்சுவலா பார்த்தா plumbers, electricians, they are all earning a lakh of rupees a month, like all technicians.
A lakh of rupees. Sir, watchman, night walking, car wiping. Those are trades in India, which is not there everywhere. They're talking of 1,000 cars he does in a week. எங்கயோ வருது. See, he may not,
they are not paying tax. They are not paying income tax. அதான் சொல்ல வரேன்.
they're not paying.
Yeah, very true, very true. Okay, I think it's almost 8:25. We have done a lot of this thing.
8:30 is the next.
Yeah, 8:30 also. I think Sridhar, this is an excellent
Good,
presentation.
thanks, Sridhar, for the wonderful oration of yours.
The slides were very excellent.
Thank you, Sridhar.
People to understand.
In fact, I'll tell you the secret. நான் வெறும் ஏஐல வந்து சாட் ஜிபிடில எனக்கு இந்த மாதிரி பிரசன்டேஷன் பண்ணனும்னா ஸ்லைட் போட்டு.
No, but that also you should validate, no? You cannot just blindly do it overall.
See,
you have to
I
validate.
could relate to it. I could relate to
Yeah.
it.
That's true. But very, very relevant, and your explanations and things are also good overall.
Thank you.
So with this, I thank everyone.
Interesting. I see. Today, எனக்கு நிறைய வேலை இருந்துச்சு. In spite of that, எல்லாம் முடிச்சுட்டு இப்பதான் டிஜி ஆபீஸ்ல இருந்து வந்துட்டு.
I didn't expect you, Kumar. I didn't expect you to join, especially you are totally tied up with the district conference.
I just came back. I joined immediately. I had to finalize the vegetarian food and all that because numbers were coming down. நிறைய matter இருந்துச்சு.
Yeah. Okay.
Okay, good night.
Yeah. In fact, yesterday DG we had a Google Meet with the DG with the presidents, explaining about the conference and all. There he was appreciative of all the chairmen who were there, who were doing day and night work. And the best thing is you don't expect any reward. Just you do for what do you call the satisfaction which we derive when you do for a conference and any event for that matter overall. That is the motivation which people have, and he was very appreciative overall. Okay.
Thankless job
இது வந்து நம்மளே தான் நம்மளை தேங்க் பண்ணிக்கணும் வேற
நீயே முது தட்டணும் நான் முது தட்டணும் அவ்வளவுதான். Anyway, wonderful, Sridhar.
Yeah, excellent. Anyway, we'll be sharing also. Sridhar has recorded this. We'll share it in the group also, so everyone will be benefited. Okay.
Yeah.
Okay. And over